Hello, welcome to European Open briefing for Thursday, August the 30th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. The US dollar is stuck near 1 month lows. It's mainly the dollar index being pressured by a stronger pound and to a lesser extent a somewhat stronger euro as well. The US markets yesterday were in buoyant mood. We had optimism regarding NAFTA, and European markets were also fairly positive as well, following some positive comments regarding the Brexit negotiations by the EU's chief Brexit negotiator. However, in Asian markets, we are seeing a somewhat risk-off mood. The yuan has come under pressure again, erasing some of its recent gains made earlier this week and late last week. We can see most Asian indices are in the red. So there's still mounting concerns about the US-China trade dispute. We've got that deadline coming up in early September, where it's the end of the public comment period on that 200 billion of imports on Chinese goods by the US, which we could, after that deadline, we could see the US going ahead with those tariffs soon after that. Apart from that, we also have several emerging market currencies coming under pressure, particularly the Turkish lira and the Argentine peso. So that is also weighing on emerging markets as well this morning. Yesterday, though, we did have a record close with the S&P 500 and the Nasdaq reaching new highs. The Dow Jones was up, but still remains some distance from its record highs. This morning, though, we are seeing a negative open in Europe despite the positive close in the US. The pound yesterday surged higher following those remarks by Michel Barnier. The pound rose by more than 1%. The euro is holding fairly steady around the $1.17 level. If you look at the Australian and New Zealand dollars, they are one of the worst performers this morning, particularly the Kiwi, which came under pressure on weak business confidence data out of New Zealand. We also saw some poor numbers as well out of Australia. And taking a look at commodities, oil prices are up by around 0.5%, rising with both WTI and Brent crude rising to multi-week highs following a big drop in US crude stocks, according to yesterday's EIA report. Gold prices are down, though, around $1,203 an ounce this morning, as the US dollar regains a little bit of ground following yesterday's losses. And looking at the performance table, we can see Kiwi dollar clearly the worst performer, following by the Aussie, and then gold prices, and at the top we've got oil prices following by USD CAD. Loonie, in fact, had made strong gains recently following the progress in the NAFTA talks, so we're seeing a bit of profit taking there for the loonie. Taking a closer look now at the dollar-yen pair, we can see that despite the weakness in the dollar index, which is holding near 1 month lows, dollar-yen has been making some gains over the past couple of days. It's eased off a little bit from yesterday's highs around 111.80. It's currently trading around 111.60. Yesterday we had an upward revision to the second quarter GDP growth numbers. They were revised up from 4.1 to 4.2%, and we're going to have more data coming up today in the form of personal income, personal consumption, and the PCE inflation, which the Fed looks at very closely. And on top of that, we've got the NAFTA optimism. So all of that boosted risk appetite yesterday, and we saw the S&P 500 and Nasdaq closing at record highs. But the dollar still is seeing some safe haven demand, mainly due to weakness in some emerging markets, particularly Turkey and Argentina, as well as, of course, those ongoing concerns about the US-China trade dispute, which at the moment there doesn't seem to be any progress at all in terms of the two sides trying to resolve their differences. Let's now move on to the UK pound. We can see that a big jump yesterday after Michel Barnier, the EU's chief Brexit negotiator, said that we are prepared to offer Britain a partnership such as there never has been with any third country. So that was a clear signal yet that the EU is ready to offer the UK a very close partnership deal once the UK leaves the EU. So that obviously was positive for the pound. It jumped above the $1.30 level, and we also saw euro pound pulling back from 11 months highs to a 1 week low of 0.8970. Despite that, there are still quite a few differences that need to be resolved. So the October deadline is looking quite unlikely now, and there have been several reports suggesting that there will possibly be an emergency summit in November. But yesterday's remarks has definitely eased some of those concerns of a hard Brexit. And finally, looking at the look at the New Zealand dollar, we can see that big drop earlier today. We had the release of the ANZ Bank's business outlook index, which fell to its lowest in 10 years, and the index has pretty much been on a downtrend since last summer. As soon as we saw ahead of the September elections, we saw Labour leading the polls, and then Labour won the elections. So and basically the business outlook hasn't been very positive since then, and continues to deteriorate, despite the fact that the new Labour government hasn't really announced any particularly market unfriendly measures, but the country is struggling to see an improvement in optimism, business optimism, and that increases the risks of the RBNZ possibly cutting rates in the coming months. The Australian dollar is also struggling this morning. So the Kiwi fell to 1 week low. The Aussie is struggling to hold to the 0.73 handle. We had the second quarter capital expenditure numbers out of Australia this morning. They came in well below expectations. In fact, they were negative, and we also saw a big plunge in building approvals in July, and so that we could potentially see a weaker than expected second quarter GDP numbers due next week. But the anti-poaching currencies struggling this morning, and it's going to be fairly busy for the rest of the day in terms of economic data, with the release of the Eurozone Economic Sentiment Index and the US PCE report, as well as Canadian GDP numbers for the second quarter. That's it from me. Thank you very much for watching, and have a great day.